once again thank our team for continuing to bring strong focus and intensity to our mission. Change is continuing to be embraced across our stores, fulfillment centers, and offices. A constant emphasis on the customer is taking hold up and down the organization. This will remain key as we pursue sustained sales growth, establish broader offerings in consumer electronics, and launch new products aligned to the long-term future of gaming. During Q1, we specifically focused on two main areas: continuing to rebuild and strengthen our commerce business after years of underinvestment, and pursuing growth opportunities in the cryptocurrency, NFT, and Web3 gaming verticals, all of which we expect to be increasingly relevant for gamers of the future. With respect to our commerce business, we kept working to pragmatically expand product selection, improve delivery speeds, and strengthen the in-store and online shopping experience. We also made additional investments in our assortment, infrastructure, technology, and talent. Our sizable Q1 investments should help us round out our rebuild cycle. With regard to new offerings geared to the future of gaming, our blockchain team continued to drive progress when it comes to advancing new products, deepening partnerships, and establishing GameStop's presence in digital asset communities. An output of these efforts was last month's launch of the GameStop Wallet, a digital asset wallet that allows gamers and others to store, send, receive, and use cryptocurrencies and NFTs across decentralized apps. The wallet, which has significant downloads and a 5-star rating in the Chrome store, will enable transactions on our new NFT marketplace when it launches in the second quarter. We firmly believe that digital assets are core to the future of gaming. Taken together, we believe these investments and initiatives prioritized over the past quarter are positioning us to become a more diversified and technology-centric business. Let me now turn to our financial results for Q1. Net sales increased 8% to just under $1.4 billion, compared to approximately $1.3 billion during the same period in 2021. As indicated in the past, long-term revenue growth is a primary metric by which we believe stockholders should assess our execution. SG&A was $452.2 million, or 32.8% of sales, compared to $370.3 million, or 29% of sales in last year's first quarter. We reported a net loss of $157.9 million, or $2.08 per diluted share, compared to a net loss of $66.8 million, or loss per diluted share of $1.01 in the prior year's first quarter. There were no major one-time transformation, transaction, or related costs during the period. Turning to the balance sheet, we ended the quarter with cash and cash equivalents of $1.04 billion, roughly $340 million higher than the end of the first quarter last year. We continue to maintain a sizable cash position, even while investing in inventory to improve in-stock levels, meet heightened customer demand, and mitigate the full impact of global supply chain issues. At the end of the quarter, we had no borrowings under our ABL facility and no debt other than a low-interest, unsecured term loan associated with the French government's response to COVID-19. Total liabilities compared to the first quarter of last year were down $8.4 million. Capital expenditures for the quarter were $10.8 million, down $3.9 million from last year's first quarter. We anticipate CapEx will continue to remain at modest levels as we make pragmatic investments in our infrastructure and tech. In the first quarter, cash flow from operations was an outflow of $303.9 million, compared to an outflow of $18.8 million during the same period last year. This does not include the impact of an additional $76.9 million received in proceeds from digital asset sales, which is included in investing activities. In order to meet customer demand and drive sales growth amidst the tight supply chain, we maintained inventory valued at $917.6 million as of the close of the quarter, compared to $570.9 million at the close of the prior year's first quarter. In terms of our outlook, we're not providing formal guidance at this time. I want to conclude by touching on the past year and our path forward in 2022. We set out 12 months ago to accomplish something unprecedented in our industry: transform a decaying brick-and-mortar retailer into a technology-led organization that meets customers' needs through stores, through e-commerce properties, and through emerging digital marketplaces and online communities. Our growth and the launch of new tech products, such as our digital asset wallet and the upcoming NFT marketplace, demonstrate that we are, in fact, starting to transform. In the quarters and years ahead, we're going to continue embracing change, putting the customer first, and focusing on long-term stockholder value. I'll leave it there for this quarter. As always, our board and management appreciate the enthusiasm and support from those who matter most: our customers, employees, and of course, GameStop's stockholders. Thank you.
This concludes today's conference. You may disconnect your lines at this time. Thank you for your participation.
Shortest conference calls on earth. You can bring me up, Greg. You can switch to me on the stream. The conference call's over. Yes, that's why I'm here. He went away to make tea. That's not enough time to make a cup of tea. But yeah, if you want, throw it at me. Hey there, folks. We're gonna do something a little different and react to the earnings release and the conference call that we just heard. PIF 809. This was not the shareholder meeting. The shareholder meeting is tomorrow. This was the earnings results presentation. GameStop reported a beat on the revenue line and a miss on earnings. One thing that the CEO did point out just now that I thought was kind of interesting, their cash flow from investing activities, they made, they said they had proceeds from the sales of digital assets of $76.9 million. They actually sold them at a loss, it appears, of $6.9 million, but they did take in $76.9 million of cash in dollars from the sale of digital assets. This is something that didn't exist on their income statement a year ago. And this is something that, this is before the NFT marketplace launches, before the GameStop wallet launched, that they're already selling digital assets. It kind of answers a question I've had, how they would account for the digital assets on their balance sheet. It seems like they may just, if you're a cryptocurrency business and you have crypto on your balance sheet, it seems like they're converting it to dollars as fast as they can. So that could be an increased liquidity thing for them going forward. That's kind of neat. I just want to point out that the stock is not really down at all. It's trading for 120.26 right now. It's not that, this is a stock that could sell off 40% on earnings or jump 20% on earnings. But this is a tremendous lack of volatility that we're witnessing here on GameStop on this quarterly announcement. Stock's not really trading a whole lot of volume. It's maybe done about 200,000 shares after hours. There are 75 or 76 million shares of GameStop. One of the data points that they did report in their 10Q filing was that there are 12.7 million DRS, directly registered shares, with ComputerShare as of the end of April 2022. That's up from, I think, 8.9 in the previous quarter. So the players, as I like to call them, the Reddit movement, whatever you want to call us, the retail investors, are are continuing to take shares out of circulation and putting computer share, to the dismay of shorts, I'm sure. Other interesting data points that we got out of the quarter: GameStop Q1 2022 collectibles revenue up 25% year over year. This is a company that, that he said it on the call. They're in the middle of a transformation, as they like to say. Um, Collectibles definitely a highlight of that transformation. If you look at the breakdown of where their revenue is coming from, 48.9% of sales came from hardware during the quarter and accessories. 35.1% came from software sales, and 16% came from collectibles. So collectibles has been slowly growing for years. It's kind of lumpy from quarter to quarter. Sometimes it doesn't grow as fast. But 25% year over year growth in collectible sales in this quarter is actually pretty good. Um, you actually saw software revenue also grow year over year. Uh, Hardware revenue was down, but when you factor in that we're like a year and a half away from probably more than that, uh, of the launch of PS5 and the launch of Xbox One X, or whatever the hell it's called, Xbox Series X. The naming system's so stupid over there. That yeah, we this kind of reflects the data that we've seen from like NPD and stuff, that hardware sales, especially of those new high end consoles, it's struggling. It's definitely struggling to because of supply chain issues. Like PlayStation said that they would have sold more PlayStations if they could have. They just can't. I will say that another data point I thought was kind of interesting is GameStop ended the quarter with a lot more inventory than they normally do. Inventory was at 917 million on the balance sheet, as opposed to 570 million in the prior end of the first quarter last year. Revenue grew almost $100 million year over year. That's solid. The company still has $1 billion of cash, as well as barely any debt. So they are not at risk of going out of business, which I think a lot of people still think. Their cash flow from operations, investing, and financing activities amounted to a negative $236 billion hit in cash. That's material, and that's why they went from having 1.3 billion to a little less than 1.1 billion in cash. So if they keep losing money at this current pace, they could run out of money by the end of the year. It seems likely that they're going to slow the pace of hiring, because I want to say they spent something like, $450 million during the quarter on hiring. Selling, general, and administrative expenses is the line item on the income statement. But that definitely contributed to their earnings miss. They had a net loss of $157 million, 158 almost, which translates to a negative $2.08 EPS number. So yeah, we're just kind of looking over some of these results. Yes, Johnny Chugs. It was funny. Greg didn't even realize it was over. He was shocked that it was over when I told him to switch over to me. Yeah, they it their conference calls are like Matt Furlong reading a book report, and then he just runs. He doesn't even say bye. But he did thank the employees at GameStop for the work they're doing. I have a feeling we're going to hear more from GameStop leadership tomorrow, when they report earnings. Yeah, the operating loss isn't great. We want, at some point, this company needs to stop losing money, and I'm not sure when that will happen. It's kind of the next step for this company right now. We've seen the short squeeze in January of 2021. We saw them raise money as a result of that, right? They issued shares, they paid off their debt. They've invested in a lot of stuff. The CEO mentioned they're investing in logistics, uh, fulfillment centers, warehouses, customer service centers. They did mention that their customer service is going to be located in the United States, which is kind of cool. They're creating some jobs there. And yeah, they're he keeps saying that please pay attention to our revenue numbers. That is the metric that we think we should be judged on right now. While I agree with that, I do think that this is true of any company. At some point, you need to make a profit. Beckerus, I'm not going to debate if the short's covered or not because, at the very least, if you believe Yahoo, it's still close to a 25% short interest. So there's a lot of people who didn't cover. Some may have, some may not have. There could be synthetic shorts that are hiding out there with short put positions. There could be shorts that are hiding out in XRT. There's a lot of places that the shorts could be hiding. I'm not going to debate that because we don't really have we're not given information as retail investors that can like where we can assert anything on that sense. Yeah. Yeah. I Oh, this split is going to be interesting. The stock dividend I think will be interesting. But yeah, I don't I when I write about the short interest at GameStop, I say it's this according to Yahoo Finance. Because yes, there is a chance that there are more shares out in the world than actually exist. I think tomorrow will be a great litmus test for that. When we find out how many shares voted, how many shares were represented at the shareholder meeting. If for some reason there are more than 76 million shares that voted, then that kind of supports what we're talking about. There are some synthetic shares out there. But yeah, at some point, I'm not saying that GameStop had to report a profit here because they're obviously investing for the future right now. But at some point, this story has to change from we're investing for an NFT marketplace, we're investing for e-commerce, to our investments in NFT marketplace and blockchain, our investments in e-commerce have resulted in this. And it's going to be a company with probably not the best margins, but it'll be better than what we're seeing right now because they are investing heavily in growth, which is what we want. We want them to grow. We want them to take share from other companies, and they're currently at a really good pace when you look at their revenue numbers. Uh, like if they were just able to repeat this, which I'm sure they'll do better than this in Q4, but if they were just to report what is it, 1.4 for 4 straight quarters, you're talking about a $5.6 billion run rate. Obviously, Q4 for them or their holiday quarter tends to be bigger than that. So yeah, this company that could easily get above 6 billion in revenue, maybe even closer to 8 billion. There are things that are going to be on the income statement in 2022 that simply didn't exist in 2021. So it's really going to be fascinating to see what kind of volumes we get out of the NFT marketplace, and that would be an interesting guide for where we're going to go in the future. But yeah, like I'm not saying that I will say that it doesn't appear that they're a going concern, but they are spending money and losing money at a pace where it is attractive for shorts to still bet against them, right? The cynics out there are going to say NFTs have peaked, crypto is stupid, and GameStop is late to the party. That may all be true. We have to see what happens when the market launches. It may be a scenario where the crypto market's actually recovering by the time this marketplace launches. I know the wallet's out there, but I don't think this story really kicks off until we see who the NFT marketplace partners are, who was granted money from the Immutable X. I think it's like $100 million fund that they put together for like almost kickstarting things. Uh, yeah, So that's all going to be interesting to pay attention to. I'm getting phone calls because GameStop just reported and people want to talk to me about it. But yeah, any other questions in chat? Happy to answer them. If you have any opinions of your own on the earnings, I'd love to hear them. But we'll try to keep this short and sweet because the GameStop CEO also does such things. I do want to go back to that the sale of the digital assets. I think is a very interesting line item that did not exist a year ago. $76.9 million, and they haven't even launched the NFT marketplace. That's cash that just simply didn't exist a year ago on their income statement and on their cash flow statements. I think that's kind of interesting. I'm interested to see where that goes for them because this, short, yes. I question GME leadership's sweetness. It was okay. So you're not sure if Matt Furlong is sweet. That is fair. I don't really know Matt Furlong. He's taken some funny pictures in front of an Amazon sign. I know that much about him. But yeah, it was short. It was very short. I think it was like under 15 minutes. They don't do Q&A, which I find annoying. But then again, you have Wall Street analysts like Michael Pachter who have $30 price targets on the stock. It's currently trading for 122, so that's pretty dumb. But that's just I'll try not to shit on Michael Pachter too much. Look, I like bland oats. Steel cut oats are my jam. That's my breakfast every day, and I don't put cinnamon or sugar in it. Just some water, throw in the microwave, call it a day. That's basically the GameStop conference call in a nutshell. I'm trying to see if there's anything else we could talk about here. I mentioned they have $1 billion of cash, very little debt. So that's one thing. Companies that go bankrupt tend to have to need debt on the balance sheet to do so. So what they've done with rebalancing their balance sheet, they've really put things together there where I don't think there's this argument that they're a going concern is just pretty dumb. uh thank you for thanks to all these first chat people. Nice to meet you folks. Thanks for tuning in.
What happens if like any NFT investment is a risk. Any investment is a risk, but there's more or less risk with each thing. What happens if this blockchain digital wallet thing just completely falls flat and goes the way of like the Bored Ape NFTs or even like Dogecoin, the way that's ending up right now?
Uh so let's just okay, you mentioned two things there. So let's look at Dogecoin or Dogecoin as it's called, Greg.
Didn't I say that? Did I say it wrong?
Yes, you said Doge.
Eh.
Dogecoin right now is valued at $10 billion, Greg. So yes, it has fallen quite a bit, but it is still a massive asset. The Bored Ape Yacht Club has a market cap. Let's see. Where is CoinGecko? Here's CoinGecko. I'm trying to see what they're being valued at these days. Yeah, Bored Apes are currently valued at $1.5 billion, Greg. That's after the crash. So we're talking about a company in GameStop that's being valued somewhere around. Let me see where its current market cap is. GameStop is being valued at around 9.27 billion right now, Greg, right? And that's with existing sales pre NFT marketplace of about $6 billion. So the question becomes, so you're asking what happens if this completely flops? Like there's $0 of revenue that are ever generated from is that what you're saying? Like this thing
Or
completely dead on arrival, does nothing for the company.
Yeah, or
What
if
does
like
that do? What does that do to the company?
Yes.
they're not betting the company on this. They still have $1 billion in cash sitting on their balance sheet, and they've invested not just in the NFTs, not just in the cryptocurrency, not just in the blockchain. They've invested in online commerce, right? They are a online store, more so than they have been in the past. Like, they're doing same day deliveries in some cases. It depends on your region, but I think that there's two things going on here. They're not betting the whole. I guess my answer is they're not betting the whole company on NFTs. So this could go to zero. They would take a write down in a quarter, but it would not be. It wouldn't be a failing condition. They didn't have to lever up their balance sheet to do this, Greg. If they issued a bunch of debt and then they did this, that could kill the company. What they did instead was they issued shares when the stock was in the 200s. They paid off all their debt, and then they invested in both blockchain and e-commerce. And I'd have to go. They don't really break it out and tell you who they hired each quarter, but they've spent close to $1 billion hiring. So that would be a sunk cost, right? And that would be the part that hurts the company. But I wouldn't say it would be a flesh wound. It would hurt, but it wouldn't kill the company because they could just get back to selling video games. You know what I'm saying? Whereas the other side, which I think it's fair to ask this question too, is what if the NFT marketplace or the GameStop crypto wallet is a success? Well, that's revenue that didn't exist at this company last year that now does. So it's an incremental benefit to them. Any dollar they get out of this NFT marketplace is going to be better for them than a year ago. It's not to plug our own Shacknews company here. It's not unlike Shack Pets. If we even get $1 from Shack Pets this year, it's more than we did last year off of Shack Pets. You know what I mean? So it's kind of similar in that sense. Does that make sense?
Yeah, growth is growth, right? Even if it's a 1% return or 5,000%, it's still a return.
And it stands to reason that the margins on the NFT marketplace for them are going to be better than the margins on e-commerce. E-commerce is a ruthless business where logistics are very hard, right? Being a logistical master is very difficult in retail. Amazon, Walmart, right? They're known for that. But if you go look at their margins, they're razor thin. You're talking like 2% profit margins, 1% profit margins. If the NFT marketplace has higher margins, not only does this become a revenue story for them, it becomes an earnings story for them, which is why I pointed out that $76 million that they got of cash flow from investing during the quarter. If that starts turning into a quarterly phenomenon, that's not insignificant, right? That becomes, however much. We're not sure what the run rate is right now. And that's the uncertainty with the stock right now, is we don't know what this NFT marketplace is going to look like. We don't know what the demand for it is. We do know that, I'm not an NFT guy. I don't own any NFTs. I own Dogecoin because funny dog money, right? But I'm able to look at things objectively and say, if the NFT market collapsed in January and it has seen a rebound in recent months, maybe we're seeing a flat line of what demand for NFTs are, right? Last year was the bubble demand. Maybe this year is a reversion to the mean kind of demand. It doesn't matter for GameStop. They're butters in this situation. And I know you probably haven't watched this episode of South Park yet, but if it doesn't really matter to them what the price of Ethereum is if they're going to do what they just did this quarter, and every time they take in crypto, they sell it and convert it into cash, right? It actually becomes this weird thing where they gain cash, but they actually lost money, right? Because they said they lost something like $6.9 million on this digital asset, but it's still $76 million more than they would have had a year ago. You know what I'm saying?
Yeah.
So it's like, from a cash flow standpoint, I think the NFT marketplace could end up being a good thing for them. But once again, we don't know yet. And I hate to make predictions. So when I answer a question like that, I like to give both sides of it. And I think I did that, where it's like, if the NFT marketplace is a success, there's this incremental benefit to the revenue and the bottom line. If it is a failure, it's definitely going to hurt the bottom line. And it'll probably be one of those band-aids that they rip off quickly and say, we're shutting it down. You know, remember what they did to Congregate or whatever? Like, it'll be a one-time write-down, and the stock would crash that day. It would probably overreact to such a thing. But if it's not working and they cut it off early, I don't think there's any risk to the company for trying this. And that's why I kind of compare it to Shack Pets in a sense. Where like, if Shack Pets failed, I didn't bet the company on it. You know what I mean? It was an experiment. And in our case it worked, but it remains to be seen what demand for it will be. I would point out that there are several million people out there, Greg, who unabashedly love GameStop. Like, can't get enough of GameStop. They buy everything they can from GameStop. They're buying their PC parts from GameStop. They're buying their clothing from GameStop. They're buying kids' toys from GameStop. They're buying chairs. They're buying computer stuff. Like, they're buying games. They're buying consoles from there. That it has a brand loyalty in 2022 that is similar to the brand loyalty we saw in Apple in the early 2000s or Tesla in the early 2010s. I know that sounds crazy because it's a video game retailer, but this is a cult stock. And the cult leader is Ryan Cohen, and people worship at his altar. You know what I mean? So I think that that's something to factor in here, is that there are people who go out of their way to spend money at GameStop because they have a vested interest in the company's success. So I think that's another thing. Because I follow a lot of these people on social media, they're already in the GameStop wallet. They already have a GameStop wallet. They've already been trading NFTs with their friends. And you know, we are labeled the meme investors, right? The NFT marketplace could be a meme marketplace, Greg. And it wouldn't surprise me to see trolls trading pictures of Ryan Cohen on his own marketplace back and forth. And who makes money in that scenario? GameStop does. So I think it's way too early, but it's important to ask that question, that what if this fails? I like to always, when I'm long a stock, and full disclosure, I'm long this stock, my family's long this stock, I have options on this stock. I do have put options on it because I wasn't sure if it was going to tank today or tomorrow. So I did buy some put options that expire Friday. But if they expire worthless Friday, like, I'll be happy. You know what I mean? So I did insure myself against a potential downturn, at least this week. But yeah, like, I think that there is I'm surprised at the stock price right now. Like, this.
You said it was higher than it should be, yeah.
Usually it sells off on earnings. It just does, even when they're good. But their results were bad. Like, the it's this weird push and pull, and it's been happening for several quarters now. Companies beating on revenue, missing on earnings. And I compare it to Tesla, because Tesla did that for like 8 years. It was beating on revenue, missing on earnings. Because companies that are in a revenue growth mode will spend to grow. And once again, this kind of sounds like Shacknews. Like, we're not making money here, but I'm not cutting costs to like meet some bottom line target. I'm going to continue to spend to grow. And I think that's what we're seeing over there. So the question becomes, when does the spending peak? Right? When does their spending peak? When do these investments they've made start to show up on the bottom line, not just the top line? And that's hard to judge. Maybe by the end of the year, we'll have a better idea about that. But, yeah, that's about it. I don't have a whole lot to say. This was a I think it was good that they got this out of the way before the shareholder meeting tomorrow. Because now there's no uncertainty going into it. Like, we know what their results were. I think the company has been very transparent about what they're doing, right? Like, I pointed out in the article on shacknews.com, where we break down the earnings results. I included an excerpt from the 10Q filing with the SEC called Business Priorities. I'm just going to read it real quick. And this will echo some of their past statements. GameStop is on a strategic path to fully leverage our unique position and brand in gaming. GameStop is focused on transforming into a customer-obsessed technology company to delight gamers and is actively focused on efforts to 1. Establish e-commerce excellence. 2. Expand our selection to deliver market-leading offering in gaming and entertainment. 3. Leverage existing strengths and assets. And 4. Invest in new growth opportunities. We are taking steps that include increasing the size of our addressable market by offering vast product selection and growing our product catalog across PC gaming, collectibles, consumer electronics, toys, AR, VR, blockchain, and other categories that represent natural extensions of our business. Expanding fulfillment centers to improve the speed of delivery and service to customers, building a superior customer experience, includes by establishing a US-based customer care operation supported by frictionless e-commerce and in-store experiences, and strengthening technology capabilities, including investing in new systems, modernized e-commerce assets, and an expanded experienced talent base. And then they mentioned the launch of the GameStop wallet in May. So yeah, they're pretty committed to, I talked about how the NFT marketplace, it is year over year numbers that aren't going to be apples to apples. That's also true of what's going on with their product offerings. They now sell Alienware laptops, MSI laptops, like Razer laptops, that they simply did not sell a year ago. So this is another story about revenue that did not exist on the income statement a year ago that will going forward. Now, admittedly, a lot of this revenue is going to be lower margin, maybe even zero margin, right? A lot of retailers don't really make a whole lot of money off of selling a laptop. You know what I mean? Like, very little margins there, especially if they do something like fulfill an online order for a Razer laptop with same-day delivery. Then you're really eating into whatever profit margin you had on the product. So that isn't going to be a profit driver, but it's going to be a revenue driver. And at some point, what I really think needs to happen here is we need to figure out where is the revenue profitable for them. I think it's in collectibles. And oddly enough, NFTs are digital collectibles. So the revenue off of NFTs might end up being their most profitable revenue when you look at the margins on it. But we don't have that info yet, so that's all just conjecture. But I can tell you that these hardware moves that they're making, definitely helping them on the top line, not necessarily helping on the bottom line. And if that's their big bet, then I think they are in trouble because they need to figure out a way to be profitable while doing this expansion. So I think right now shareholders are giving them the benefit of the doubt. If they were missing on revenue and earnings, I think the stock would get clobbered. But the fact that they've consistently shown us revenue growth is really impressive, especially when you compare it to their industry peers. And factor in that we're in a shrinking economy here in the United States right now. The GDP in the first quarter was down. So GME is actually growing faster than the US economy when it comes to the revenue line. But yeah, that's about it. I don't have anything else to say. Yeah, any other questions, Greg?
No, I just think it's interesting you said the brand loyalty is a thing because maybe it's because I'm older, but like
you're an older gamer. You hate GameStop. Like there are people out there who have And look, I have a complicated relationship with GameStop. I've been in bad GameStops before, but I've also like gotten to know a lot of my GameStop like people, the people who work at my GameStop, right? Because they saw my hat and they're like, oh, let's talk about DoomCon or whatever, like they know I own Shacknews and stuff. I talked to them about how many times they've been robbed. The one in Canton that used to be a Funko Land, they get robbed like once a week. So like stuff like that sucks. And that hasn't really changed. But they're being treated better. The employees are being treated better under this Ryan Cohen regime. Yeah, there's a lawsuit in New York, but it's kind of weird. The stores look different than they did in 2019, Greg.
More toys.
You go in there,
yeah, more stuff.
It's the walls are covered in stuff, and the games are behind the counter in a drawer. So it's a better use of the shelf space than previously. And there's also like racks in the store now. They're also doing some experiments with like tabletop nights and some like esports lounge kind of concepts in some of their stores. So I think like, moms used to like leaving kids in GameStop with the Nintendo 64, the GameCube kiosk, right?
Yeah.
Because you could just play a game and then you come back,
minutes,
you get your hair done, go shopping, come back, pick up your kid. I think GameStop's going to pivot to be a destination like that again, but maybe it'll be focused on PCs because they have PC kiosks now. Or maybe it'll be a tabletop scenario. So I think that there are, at the core of this whole thing, I believe we need a video game store. Period. I believe we need a comic book store, and I believe we need a video game store. And there aren't any other video game stores. So it's like the last stand for video game stores. So you either believe that we need a dedicated video game retailer, or you don't. Right? And that's why this is it's very much so a binary trade. But the comparisons to Blockbuster are really weird because I get it. GameStop used to be 80% revenue coming from software sales and a lot of it coming from used software. That's just not the future for them, right? But it's only 33% or 35% of revenue is software now. So it's like, that story is already kind of played out.
Does that include used as well? Like the used market?
Yes.
The secondhand, geez, that's so much smaller than it was. Like 10 years ago, it was huge. They had huge plants in Texas that just dealt with refurbished hardware and software. Just huge, just assembly line things.
It's a drastically different company today than it was 10 years ago. And the effects of it have already been felt, is my point. That's how the stock fell from $55 to $2, right? But then this tremendous run from $2 to $483, back down to 77, now up to 100, whatever, has been driven by this turnaround. So you either believe in the turnaround or you don't, right? So I understand people who don't want to invest in this stock. I've tried to get people to invest in this stock, and a lot of people think I'm crazy for investing in this stock. But it's heavily shorted, right? 25% of the stock is shorted, if you believe Yahoo. And then if you factor in those directly registered shares, and if you factor in the insider ownership, it's a lot more than 25% of the available shares that are shorted. And each month that this continues, I can just speak for myself, I become more stubborn in my bullishness of this company. And each time a hedge fund fails, we become stronger as a group of shareholders. This is like Occupy Wall Street, but it's working. I think that's a good place to leave it. But hey, thanks for watching, everyone. If you like this kind of content, hit that follow button here. If you really like that content, you can sub to us. If you have an Amazon account, which you probably don't because you hate Jeff Bezos, but if you do, you can actually give us Jeff Bezos' money for free by attaching your Twitch to your Amazon Prime account and donating a Prime sub to us. You can also go follow us on YouTube. We're Shacknews Media. Shacknews Games on YouTube. Gamer Hub videos on YouTube, and Shacknews Media on Instagram, Shacknews on Facebook, which is blowing up these days. Yeah, we're Shacknews on Twitter. There's also shacknews.com, the source, the alpha, the omega. We actually have an app called Shack Pets you should check out. All sorts of good stuff. So there's lots of ways to support us. GameStop is currently 123.29 per share after hours. I don't think anyone would have expected this. It's rather surprising. So yeah, please download Shack Pets if you haven't. And thank you, Denny, for sharing that and all the clips he did today. But yeah, I think that'll do it, Greg. I appreciate you helping me out with this stream today. But yeah, let's get out of here. Thanks for tuning in. I believe Steve Tendo will be live in a few hours, playing some classic NES, SNES, or Nintendo Switch games. It's hard to say that. He's a man of many talents, that Steve Tendo. But yeah, that's it. Power to the players.